a waterfall decline.
Yeah.
And we look back since 1900, of the 12 waterfall declines previously, almost all are V-shaped bounces, except for 2022. So I think it aligns with history. Yeah. But even on my way here, someone stopped me and said that they're just a person who watches CNBC says they're still bearish. They don't understand why markets have rebounded. I think the majority of people are bearish.
I'm getting more bullish on that forecast, but I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years. I think Bitcoin's up 57% a year.
Lee highlights that the recent sharp market downturn closely resembles past waterfall declines, sudden steep drops in asset prices that historically tend to be followed by equally sharp recoveries. Drawing on over a century of market data, he points out that since 1900, the majority of these rapid declines have produced V-shaped rebounds, where markets quickly regain lost ground. While 2022 stands out as a rare exception, Lee believes the current recovery aligns well with this long-standing historical pattern. This suggests that the present rebound may not be an anomaly, but rather a continuation of how markets have typically responded to similar sell-offs in the past. Subscribe now before Bitcoin hits 200K and you regret it.
I think it's hated because not only was it near death, but it was a dire economic scenario that in people's minds is still unresolved. And yet the markets have rebounded the entire decline and actually now approaching all-time highs. So it's been too fast. And I think a lot of people liquidated and then never got back in.
Which part was too fast? The rally or the April lows?
Both. It was a waterfall decline.
Yeah.
And we look back since 1900, of the 12 waterfall declines previously, almost all are V-shaped bounces, except for 2022. So I think it aligns with history. Yeah. But even on my way here, someone stopped me and said that they're just a person who watches CNBC says they're still bearish. They don't understand why markets have rebounded. I think the majority of people are bearish.
People stop you on the street to tell you that they're still bearish?
And then what do you say when they say they're still bearish? Do you
say bye, right?
Yeah, what do you tell this person?
Well,
you probably love that.
This person watches CNBC because he was telling me that he's like...
Many people watch CNBC,
a lot
Tom.
of people.
Many, yes.
Yes.
We get stopped all the time.
Yes.
But what did you say in response to, I'm still bearish?
Well, they said PEs are too high. And I said, but the 10-year can come down because Powell thinks there's inflation risk premia in the 10-year yield. And if that comes down, then PEs aren't expensive.
So I do wonder with that as your bull view that rates can come down. So I mentioned the weaker jobless claims today and how that's sort of creeping up. I've sort of been sprinkling in some weakness in the jobs market. Do you think that the stock market will be able to withstand that if we really start to see weakness in jobs because it means Powell's going to be closer to cutting?
Yeah, it's a good question. Joe Weisenthal called it like a slow leak in the economy. And I think it's accurate because there has been this shock. We know that like in the beige book, port volumes took a hit, trucking took a hit. But is that just a blip or is that the start of a downturn? And I think the markets are going to be able to suss it out eventually. But I mean, so many stocks are acting well and the guidance has been better that I think it feels more like a blip.
The last 6 months have been tremendous. All of the fundamental planets have aligned. Bitcoin's been acknowledged as the one digital commodity in the world by the administration. The banking regulators have given a green light to bank Bitcoin. The accountants have upgraded the accounting to fair value accounting. There's been a surge of Bitcoin treasury companies. There's like 100 public companies or more that are holding Bitcoin on their balance sheet. And every single week, there's another announcement. I think that, it used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of about $45, $50 million a day at this level. That is all being consumed by the Bitcoin treasury companies, and the Bitcoin ETFs are coming on strong. So I'm very bullish. My forecast in July of last year in Nashville was Bitcoin's going to appreciate 29% a year on average for the next 21 years. And that moves it was about mid 65,000 to 13 million a coin in the year 2045. I'm getting more bullish on that forecast, but I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years. I think Bitcoin's up 57% a year for the past 4.5 years. Again, that's double the Mag 7. That's quadruple the S&P. That's 8 times real estate, and bonds are down 4%. So Bitcoin is smashing everything, Joe. What's exciting here is we've done 3 IPOs of preferred stocks in the past 6 months. Strike was our first convertible preferred, and that was up 29%, while all the other prefers were down 6%. Strife was a fixed preferred, paying 10% fixed yield at par. That's up 22% versus all the other preferreds down 4.5%. So Stride was the third of those preferreds. And what's going on here is we are offering fixed US dollar yield, and we're swapping it into BTC yield, which is what our equity investors want. The big breakthrough is that in the preferred market, the capital never comes due. There's no refinance risk. We're basically offering a perpetual US dollar yield forever. We're getting the capital forever. And so by matching a very long duration instrument on the liability side with a long duration asset, we're creating, in essence, an indestructible balance sheet. And these preferreds are a very scalable, extremely low risk way to generate leverage to drive a very large premium into the MSTR stock. So it's a win for the fixed income investors because they're getting a yield 400 basis points more than typical preferred stocks or junk bonds would yield. And it's a big win for our equity investors because they want more Bitcoin. And this is a way to get leverage without worrying about any kind of bond coming due.
MicroStrategy, led by Executive Chairman Michael Saylor, remains a major force in the Bitcoin ecosystem. The company recently announced a new junior preferred stock offering with an impressive 11.75% yield, designed to raise capital for further Bitcoin acquisitions. This bold strategy signals continued conviction in Bitcoin's long-term potential and provides investors with a high-yield opportunity underpinned by MicroStrategy's sizable cryptocurrency reserves. Now let's go back to the interview.
Crypto Twitter is very colorful, and we have these fun back and forths. The highest standard of in this case, transparency would be a public company audit from a company like KPMG, where they're auditing both your assets and your liabilities, combined with officer representations pursuant to Sarbanes-Oxley about related parties and the like. And so we are a publicly traded company. Our assets are audited. Our Bitcoin reserves are audited by KPMG, as are our liabilities. I think that, we're always thinking and considering, is there a way to do proof of reserves in a secure way? We're not enthusiastic about publishing all of our wallet addresses and having people track them every minute by minute because it exposes our custodians, our counterparties, and our own employees to more IT risk. But we're considering it. We're thinking about, is there a way to do it with a zero knowledge proof? And we're also always thinking about self-custody and what is the right way to manage custodian risk. And I think what you see is there's the OG crypto advocates who developed a bunch of very strong ideas over the past decade, and there's an emerging class of institutional Bitcoin holders like BlackRock, like the ETFs, and like the Bitcoin treasury companies, and they're focused not just on the assets but also on the liabilities. We have to audit and publish those audits with 10Qs and 10Ks.
We were right about 2 early years, or Tesla got to where we believed it would go 2 years before most expected. In 2018 and 19, many people, as Elon was discussing and describing production hell for the Model 3, many people thought the company would go bankrupt. And yet we knew that if Elon Musk could create a reusable rocket that could land on a barge in the water, he would be able to figure out how to produce at scale the Model 3. That was to us a simple conclusion. Now, as in hindsight, as we're learning from Tesla, production hell, and they themselves were worried. That's why Elon slept on the floor in the production factory and just became maniacally involved, which is how he works. So yes, and now our prediction, the stock is, I'm not going to be exactly right on this, $270, $280. Our prediction in 5 years is 2,600. And 90% of that valuation comes not from the electric vehicle, but from this RoboTaxi platform. Because the electric car, if you think about it, is, a one-shot sale, sell and hope they come back when they're replacing their car.
This essentially means that we'll be driving cars that we can click a button and then it becomes an autonomous taxi. So I go on holiday, I have my Tesla car at my house. When I go on holiday, the car turns into a taxi and starts chauffeuring people around. It makes me money. But also from the consumer's perspective that are trying to hail a taxi, at any point I can go on my Tesla app, press a button, a autonomous car comes to me with no one driving it, and it takes me to my destination with no driver at all.
Right.
And then the recurring revenue model, I believe, is you subscribe.
It probably could. It could be you could subscribe to the network, or they could, maybe it could be either or subscription or a la carte if you don't think you're going to use it that much.
Saylor and Kathy also touch on Tesla's latest leap in autonomous driving, highlighting the company's plan to launch its AI-powered RoboTaxi service in Austin, Texas, by June 2025. This move marks a pivotal step in Tesla's transformation into an AI and robotics-driven company. Lee sees the RoboTaxi initiative as a potential game-changer, one that could become a major contributor to Tesla's long-term valuation and a key driver of future growth. Want more? Click the next video and dive deeper.